Okay, everybody. Good evening. I hope you're doing well. Thanks for coming in today. My name is Jeff Gibby, and I'll have the pleasure of reading a legal disclaimer and introducing our guest tonight. So, welcome to the class. Thanks for coming. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Okay, cool. I have said that a few times. Today we do have a very special guest. Tom Carr's come in. I don't know if you have seen how the add-on that we've worked on together with Dr. Carr, but it's we just got a review back from Stoxx and Commodities magazine that I'm going to share a little bit with you a little bit later. But we worked very, very hard with Dr. Carr. I really like Dr. Carr's methodologies, what he has to say. It's very, very sensible. It's very, very structured, and it works really, really well. So you're going to enjoy today's class. We haven't had Dr. Carr in for a few months, and I think some of the work that we've done with him is probably some of the best work we've done this year, if not forever. So with that being an introduction, I'm going to get out of the way, let Dr. Carr talk to you for a few minutes, and we'll go from there. Dr. Carr?
Yes, hi, Jeff. Just want to double check, make sure you're hearing me okay. Is this fine?
Oh, like an angel.
Great. Sounds good. All right, everybody. Welcome. Thank you, Jeff, for that nice intro, and I appreciate your kind words. And thank you, everybody, who's joining us tonight. I know we have a few of my own subscribers with us tonight, so a special welcome to you all. Now, let's go ahead and get started. Before I jump into what we're going to talk about tonight, I just wanted to introduce myself a little bit to you in case you're not familiar with the work that I've done or am doing. I'm not a professional money manager. I'm not an MBA from Harvard. I have never worked a day on Wall Street. I'm actually by profession a professor of philosophy and religious studies, but I've had a long interest in the stock market and have been doing many years of research on various trading techniques and systems. And that led in 2002 to launch my first stock pick recommendation letter, the Trend Trade Letter, and I've been publishing that every market day since October of 2002. That has been averaging about 32% per year, about 2,200% overall to date from that, or from the date that we launched it. And then in 2007, we launched our second letter, the ETF Reversal Letter, and this is a service that trades 6 very popular ETFs, each of which has inverse ETFs and leveraged ETFs that you can use. We're long or short the 6 ETFs 100% of the time, 100% invested in each, and that averages about 67% per year, or about 5,100% since we launched that January 1st of 2007. 2008, my first book came out with McGraw-Hill, Trend Trading for a Living, which describes 10 trading systems there, 5 long, 5 short. That has become a bestseller, much to my surprise, much to the publisher's surprise, I think. And it's been translated into a number of different languages and has really gone very far to open up a lot of doors for us. We're able now to do seminars and webinars in various countries and are really enjoying the benefits of that. So that's been a lot of fun. 2010, we launched a second book with McGraw-Hill, Micro Trend Trading for Daily Income. This is a book that focuses on more intraday, short-term kinds of setups, and that has done well also. And then also that same year, in the middle of that year, we launched our third and final stock pick letter, the Cheap Stocks letter, which focuses on stocks trading under $10 per share. We hold no more than 5 stocks at a time. It's great for smaller account traders. That's been averaging 54% per year, or almost 300%, since we launched that in June of 2010. And then in today, just a few months ago, in fact, a few weeks ago, we launched our new website, drstoxx.com. We consider it to be a kind of one-stop shop for active traders. We offer webinars, trading manuals. I have a private coaching service where I will fly to you or you fly to me, and we work one-on-one together. And don't have time to do a whole lot of that, but I do that occasionally. And I also have a managed account service that we use that we trade under the uh, management company Kingdom Capital that we incorporated back in 2012. So that's the journey that I've been on. I no longer work as a professor, at least full time. I teach occasionally here and there. I do this the trading and the managing of funds and the teaching of traders full time, and it's just been awesome to see a hobby and a passion turn into a full time job. It's been a real blessing for me and my family, and so I'm always happy to give back to traders, especially those who were where I was not too many years ago. I know how difficult it can be and how steep a learning curve it is to get to the stage where you are consistently profitable. My passion is to see as many people get to that stage as possible. So here's what we're going to talk about tonight. I'm first going to just very briefly show you how to set up a watch list of the best stocks for trading. So if you wanted to whittle down the 8,000 or so stocks that are out there to maybe 50 or 60 stocks that are ideal candidates for active traders, then this is exactly how to do that. And then secondly, we're going to use a subset of those stocks to scan for the best breakout trades. Now, we are in an uptrend. Of course, you know the S&P 500 has been hitting new all-time highs recently. This is, by all accounts, a bull market. Of course, bull markets don't last forever, but when they do go strong, one of your best trading setups is the breakout trade. Very often you can go weeks, even months, without getting a decent pullback in the market, and that can be very frustrating if you're a pullback sort of trader, or if you're a trader that likes to buy off of support. I normally do that. That's my favorite kind of setup, buying stocks on a pullback. But you need to add to your arsenal, especially in a strong bull market, the breakout stock, the breakout setup, because then you're able to take advantage of stocks that are racing up to new highs. It's also a momentum kind of setup, and that can make for some very exciting trading. But if you don't do it well, it can also lead to a lot of disappointment. So what I'm going to do in the third section is to help you sort out the best breakout stocks from all the rest. Anytime you run a breakout scan in a market like this, you're going to get 30, 40, 50 stocks coming through your scan. You can't trade all of those, nor would you want to. I would say probably at least half of those will pull back and not give you a decent trade in the end. So I'm going to help you sort out. I'm going to give you three additional filters you can apply to your short list of breakout candidates to find the best possible candidates from all the rest. And then lastly, I'm going to leave you with one stock that I think you should consider entering tomorrow. And I'm going to throw a little bit of a twist into this particular webinar. I've given a very similar webinar over the past several months on several occasions. This is, I think, our 7th or 8th occasion giving this same topic. And each time I've given you a stock to buy on the long side because it's breaking out to the upside. And in 6 out of those 7 stocks that I recommended, we've had really good results, anywhere from a 15% gain up to a 50% gain over several trading days or a few weeks. The last one that I gave was a stock called UNXL. UNXL, you might know the company. It's an amazing trading stock. It's up and down huge percentage moves in both directions. But when I suggested it to buy long because it was clearing its breakout pivot points and everything was pointing in the right direction, it turned out to not be such a great trade. It went up about 7 or 8%, which is pretty good. If you had moved a trailing stop up, you probably would have hit about break even. It did pull back down, hit that break even stop, and continued to sell off another 10 or 15%. So that was the one sort of dud among the others, but the rest of them have been excellent candidates. I'm going to give you a little bit of a twist, though. I'm going to show you how to use our long breakout setup to actually find a short trade, a trade on the short side of the market, and that's where we're going to go tonight. All right, first of all, let's talk a little bit about how to set up a watch list of the best stocks for trading. Um, your goal is to find a list of about 40 to 60 stocks that have three things in common. You want each of these stocks to have above average daily trading volume. Now, the number that you set at for volume is going to vary depending on the kinds of stocks you like to trade. The lower volume stocks tend to be more exciting, but also carry higher risk. Stocks trading at much higher volume tend to be safer stocks, but maybe not quite as exciting. But you certainly want at least above average volume. The average stock trading today trades 93,000 shares per day. So you want something about 100,000 shares or above. Personally, I like to place it at about 300,000 or above, even 500,000. The kinds of positions I take in my hedge fund, the 818 fund, require quite a bit of liquidity. Even a million shares per day is about what I'm looking for. But you want above average trading volume. Secondly, you want above average volatility. Now, there are various ways of measuring volatility. Beta is one of the better ones. A stock that carries a 1.0 beta is a stock that is just as volatile as the S&P 500. So in other words, if the S&P 500 goes up 1%, your stock is likely also to go up 1% and vice versa on the downside. So we want to see a beta that's above 1%, above 1.0. 2.0 is kind of a minimum, so twice as volatile as the S&P 500, and you'll find some of the best trading stocks up around 3 or 4. Carrying betas of 3 or 4, even above 4. There are also other ways. There's relative volatility that is a very nice indicator to detect volatility in stocks. There's an average true range that you increasing degrees of that. But the beta is probably the best indicator you can use, the most consistent one, and it's the one I use most frequently. And thirdly, I like to price stocks in my best trading stocks watch list in the sweet spot of the price range. You can trade stocks that are below 10, and as I said, I have a whole newsletter devoted to that price range. Those are exciting stocks. You can, whip out 20, 30% gains in a few trading days with the lower price stocks. That's a lot of fun. But you can also lose the same amount on the downside. Stocks have priced above $50 per share tend to be the big behemoth stocks, the bluest of the blue chip stocks. Now, some of those are quite exciting, and sometimes you can get, a really nice trade in something like Apple or Google, or some of these that have a lot of publicity. These are stocks trading well above $100 a share, even $500 a share. But studies show that the sweet spot is between 10 and 50. That is to say, you're going to get the most bang for your buck with the least amount of risk. You're going to get good movement, good price movement, without carrying as much risk as the lower price stocks. So those are the three parameters that you want to plug into a scan that you'll use to find the best trading stocks to form your watch list. I like to simplify the whole process into 3 easy steps. What you can do if you're using Metastock's Trend Trading Toolkit, which is what Jeff will introduce you to later tonight, and that's the toolkit that the add-on rather that he and I and some of the excellent programmers at Metastock put together over, gosh, a couple of years. Took quite a while to get that together, but it's a great product. I use it almost every trading day when I'm in the markets, and it has a preset filter that has those 3 parameters already programmed into it. It's called the pre-filter scan. A couple clicks of the mouse, and you're going to have a great watch list somewhere between 40 and 60 stocks that satisfy all the parameters that we just mentioned. Secondly, then you want to create a template for your watch list. By template, I mean your favorite look at the chart. What indicators do you want to have on it? Do you want to use a candlestick chart, a bar chart? Do you want moving averages? If so, what kind? Bollinger Bands? What sort of momentum indicators do you need to have? What kind of volume do you want? How do you want to track volume? You plug all those into your chart. Now, the toolkit that we just mentioned it comes with 5 already programmed in templates. So it does have a template just for this breakout scan. So you would simply, highlight that, apply that to all the charts in your watch list, and you're good to go with all the indicators that you need. And then, excuse me. Thirdly, you want then to go through the charts one by one and simply eyeball them for breakout setups. We're talking tonight about breakout stocks. So you want to look for stocks that are making new near-term highs, price highs. If you're trading to the downside, of course, you're looking for breakouts to the downside. You'll want to look for new near-term lows. I want to be a little more specific than that. I'm going to talk a little bit more about the breakout scan that we have programmed into the Trend Trading Toolkit. It's a variant, I should say, of the trading setup that I have described in my first book, Trend Trading for a Living. It has both a bearish and a bullish version to it. We're going to talk tonight about the bullish version, but you'll see we'll add a little bit of a bearish twist to it. And then, and of course, you can program this into any sort of technical scanning service that you might be using. Many of my clients use stockcharts.com or NinjaTrader or TC2000. But the advantage of using the toolkit with Metastock is, of course, it's already all the hard work is done for you. And of course, if you want to go in and tweak behind the scenes a little, the parameters of the scan, you're able to do that. I told Metastock I wanted the purchasers of the toolkit to have the option of going in and editing the scan as they wanted to, so all the information is there. It's not sometimes you'll buy an add-on from Metastock and the actual scan itself is hidden from you, but in this case every scan has the parameters all there, so you can tweak them and test them as you wish. All right, so here are the very, very basic minimum standards for a healthy strategic breakout setup. And I have just two standards. One is that the price high, the breakout high that we're trading, has to be at least a 40-day high. In other words, it's the highest price high over the past 2 months. And it doesn't matter that much whether you're talking about an intraday high or a closing high. I myself prefer a closing high, but very often those intraday highs are sort of testing the waters, and then the stock on the next day will come back up to it. So intraday high or closing high doesn't matter. And then secondly, you also want to make sure that there's sufficient volume supporting the breakout. And my favorite volume indicator, besides the volume bars themselves, which gives you also a good visual read, is the on-balance volume indicator. And the on-balance volume indicator, you probably know, it's a running cumulative number of shares traded per day. And if the stock closes up on the day, those shares are added to the running total. If the stock closes down, the shares are subtracted from the running total. And you'll get nice looking trends in the OBV. And you can smooth that out with a moving average, which I like to use. You'll see that in a moment. And will give you a good sense of whether volume is also breaking out to new highs or whether it's not. And if it's not, we don't want to trade that breakout. Okay, so those are the minimum standards. Then, as I said, in a market like we've got now, when you run the scan, I ran it today during a break and ended up with about 40 stocks that came through the filter. That's obviously too many to trade. Not all of those are great strategic breakout stocks. How do we separate the best from the rest? I'm going to suggest you add on 3 additional steps to find the best stocks. You're going to want to find stocks that are also not only showing new price high, new OBV high, but also a new MACD high in addition to the other 2. So you've got MACD, which is a lagging momentum indicator. It's a trend indicator that is confirming the price trend. Now, if MACD is a lagging indicator, so if MACD is also showing a new high, you know this one has some momentum behind it. And very often you'll see in a little bit, when MACD does not confirm the price high, price rolls back over. Turns out to be a false breakout, a head fake, as some people call it. So we want to make sure MACD is confirming the high. Secondly, and you'll see what this looks like in a minute, we want the closing price to be a significant difference below the resistance trend line. So when you draw a trend line over the pivot highs of the previous prices, previous price chart, you want to see where the close is on the new breakout signal. You want to see it quite a bit below the resistance trend line. If it's right up against the trend line, don't trade it, because there may not be much room for it to move. It may consolidate at that line. It may pull back from the line, and you don't want that. So if you're confused on that point, don't worry. I'm going to give you some good visual reads of that in just a moment. And then thirdly, you want to see fundamentals that support the breakout. And let me just pause here very briefly. I've got a third book that's coming out. It'll be out in January this next year, if not before. And it's how to combine technical analysis with fundamental analysis. And this has been the cutting edge of growth for me as a trader in the last couple of years. I've put myself through a super heavy duty look at fundamental analysis. It was not part of my background, not part of my training as a trader, but I have made it such because I have found my last 2 years of trading have been the best years for me, most profitable, most consistent. And that's because when you've got fundamentals supporting the technical move, you've got the best of both worlds. Why not? And the fact is, it's really not rocket science. So I'm going to show you very briefly some key fundamentals to look at to help you support the best strategic breakout moves. When you don't have fundamentals supporting you, you may still get a decent breakout, but it's not likely to last because the analysts, hedge fund managers, professional money managers are going to pounce on those new highs when they see the stock has become overvalued or if the story does not support that breakout move. And you don't want to get on the wrong side of a trade like that. So we'll show you how to avoid that. Okay, so here's what your trend trading toolkit, the particular breakout on the long side exploration will look like. You simply highlight that. You can see off on the right side of the chart here the description of the of the of the exploration, and it's called the long blue sky breakout because we're looking at blue skies overhead as price moves up into new high territory. So you would simply click on that, a couple more clicks, and then you will have your short list of stocks to watch. I'm going to fast forward a little bit through that process because we don't have a lot of time tonight to look at a stock that came up when we ran our blue sky breakout some months ago. This is back in May, and we were this was in the context of giving a webinar on this very topic, and this was the stock that I recommended to the attendants of the webinar that night. I suggested buying HLX at around it was just trading under 24.50 at the time, and I gave a target price of 27, and it did go all the way up to 27.50. It's now trading back down around 23 or so. It's pulled back quite a bit, but that was a nice little trade. And here's how we found it. We ran the blue sky breakout, and we were looking for a new price high, which we see right here. We see that new price high off to the right edge of the chart. It's above the previous two pivot highs. Here's one pivot, here's another pivot, and it's above that, closing above that. So, and those are the the last 40 days of trading. So we're looking at a new 2-month high at least. Down here we have confirming on balance volume, which is also hitting a new high. All of that's good. So those are our two minimum standards. It doesn't hurt that we also have a double bottom. Here's double bottom 1, double bottom 2, and as we'll see in a moment, there is some bullish divergence off that double bottom, which is always a nice thing to see. Now, how did we come up with the price target? We simply took the resistance line, subtracted the support line, that came up to about a 3-point spread. We added that to 24, which is the breakout pivot, and we got 27. So our target was 27. So on the MACD side, here we see confirming MACD. We have a MACD high, which supports the price breakout and the on-balance volume breakout. MACD is also just crossing over the zero line, which is the indicator that it's now in a bullish uptrend, and all of that's good. All of that's really healthy stuff. You want to see that stuff. So HLX was a nice trade. Everything was going for it. Everything looked good. The one other point we were wanting to make, sorry, just getting over some bronchitis here. The other thing we wanted to check, this is point number 2. We have the MACD confirmation. That's obvious. Point number 2 was to make sure that the closing price of the signal day is well below the resistance trend line. If I can pan back a bit to see the chart from a longer term perspective, here is our resistance trend line. It's over the pivot highs here in February, here in late April, and up above here in February. And if we draw a trend line over the 3-touch those three pivot highs, we come up, we extend that off to the right edge. We can carry that on as far as we can, and we can see that that's trading up. It's going to be up well over 26, and our entry point is around 24. So that's a 2-point spread right now. As the trade matures off to the right edge, this resistance line is going to keep rising. So my guess was that by the time it got up to around 27, the resistance line would also be there. That would end up becoming resistance, and that's exactly what happened. That is exactly what happened. And the other thing I want to point out on this chart, this is a longer term chart. What I have put on this chart is also available in the Trading Toolkit. You can add on what's called an expert advisory to any chart that you wish, and that will give you not only the current signal for this or that trading setup, and we have 13 trading setups in the Trading Toolkit. It's just a massive amount of trading opportunities there, both long and short, and as well as a couple of intraday day trading setups. But if you put the expert advisor on the long-term chart, you're going to see all the past signals as well. And you can see right here from 2013 on through mid-February, early March, we have quite a long string of these bullish breakout signals. Now, all of these in here are really nice signals. You could have taken any one of these and done well on a profit basis. The signals you don't want to take are these here toward the end. Why? Because of this resistance trend line. Remember, we already have 2 touches in the back. You've got enough, those 2 touches are all you need to extend the line out, extend the line out, extend it all the way here. And if you start getting signals just 50 cents below that line, you don't have much overhead space to work with before you start hitting significant resistance on a trend line basis. So you would not take those. You would simply avoid those. These over here, by comparison, look pretty good because we've pulled back and now we're starting to move back up into new high territory. All right, so that's how those 2 things work. One more point about the expert advisor. Once you have that on your chart and you have a new signal, as we do here, this is the signal that I told our webinar attendees to buy the next morning. You're going to get for every new signal where to enter the price. Here it told us to enter at 24.41. That's the safest entry point. You're going to get 2 options for putting on a stop loss, a percentage stop loss and an ATR stop loss. I always prefer the ATR because that's a dynamic stop loss and it's really pegged to how the stock actually trades itself. ATR's average true range, the average range of the stock as it trades on a day-to-day basis over a period of time. It's also a little tighter stop. It's about 7 cents tighter than the other one, so I would prefer that too. And then we have 2 target exits, one at 28 and one at 27. I would go with the ATR again, but I also like the fact that it confirms what the chart pattern was saying about 27 as the target. And again, it did go all the way up to 27.50 before it pulled back. All right, so that's kind of how the toolkit works on the breakout stock setup. Let me go over here a couple of previous winners. I did give this webinar again back in May and again in July, early July, and we had Groupon on our watch list as a possible stock. The early May signals were very nice ones as they moved up into new highs, confirming with on balance volume hitting new highs and confirmed by MACD hitting new highs. And that's trading at around 7 and it moved all the way up to 12. So that's a nice trade if you hung on all the way. And I gave a seminar again right here in early July. I said, don't buy it here. Wait for a little bit of a pullback. I said, don't buy it there because it was running up into, in fact, it had already closed out over the resistance trend line. And so traders who bought it maybe bought it on the pullback could have gotten in somewhere here mid-July for a nice trade of something like 9 to 12 over a couple of months. It did also hit another new breakout trade right here, but everything else is looking good. You've got OBV at a new high. You've got MACD at a new high, but you're also looking at a trend line resistance problem there, so you would probably not take that latter signal. Another one that we highlighted just around the same time in July, and we did also treat this early April, mid-April, sorry, was AFOP. And AFOP is one of those awesome stocks. It has both great fundamentals. I wouldn't say great fundamentals, but it's up there in the upper third, at least, of growth stocks. And it also has a great looking bullish rally chart, momentum chart. And these early signals down here are nice ones. You do have a little bit of room to run before you hit the resistance trend line, which which probably wouldn't be coming into play in any case because you really don't have much more to set the line other than these early this string of highs right in this area here. You need another good pivot high, which you don't get until up here to really set that resistance trend line. So prior to that, all of these signals are probably going to look pretty good, and they turned out to be really nice signals. I mean, you're getting in here at around 11 or 12, and it's very quickly running up to 17, even 18 in a very few weeks. So those are nice signals. And this is the one you would not take down here at this end. You do have a new OBV high on this new price high, this nice little bullish gap up right here. You can see that little gap. New price high, new OBV high, but we're not getting a confirmation in MACD. That's problem number one. And we're also right up against the resistance trend line. That's problem number two. So you would not be taking this. But let me say this. This is where you can flip the bullish breakout to become a short signal indicator. And that's how we're going to use it tonight. When you've got a nice long uptrend like this, I mean, it started way back here in mid-April, and it's peaking out here in late September, and it's really, it's rallying from a level of 6 all the way up to 23. That's a huge run, obviously, more than 300%. It's time to take a little bit of profit off the table, and that's what people are probably thinking. So when you see a new OBV breakout signal that's right up against a resistance trend line with the MACD, sorry, the MACD indicator showing bearish divergence. In other words, it's not hitting a new high, it's not confirming the breakout. That is a signal to put on, if you want to, put on a very short-term short in that stock. And the stock I'm going to recommend tonight shows just that setup. So we'll get there in just a moment. I want to first show you that AFOP is a strong stock, fundamentally speaking. And I have my own 9-point fundamental grid that I put all my trades through, both on the long side and the short side. And each of the 9 points receives a grade of either 0, 1, or 2. It's a 0 if it's negative, it's a 1 if it's kind of average, and it's 2 if it's bullish. And when you add up those scores, you'll get a numerical value, and the higher the value, the more bullish it is, the lower the value, the more bearish it is. Very, very simple, very easy way to do basic fundamental analysis. And I look at a number of things. I want to see, first of all, that growth next year is higher than this year. That's not always true for a lot of companies. I want to see that you've got some decent return on equity, you've got some decent return on investment, return on assets are decent. I want to see low debt. I want to see sales and EPS quarter on quarter in the double digits on the growth side. The higher the better. This one is in the triple digits. This one even has, this is AFOP, this has a dividend, which you don't have to see, but the fact that it has a dividend indicates to me it's got some good cash flow. And we can see that this does have, it is a profitable company. It does have some insider selling, which isn't always a negative. People sell on the inside for other reasons. Then the stock is going to go down. But nevertheless, it was a bit of a red flag. So those are some easy ways very quickly to look at the fundamentals of a company. Here's one that I wanted to point out. This was a signal that we did not take, but we did put on in our trend trading newsletter on the short side. And unfortunately, we did not hold it long enough. But just to show you how powerful a signal this is on the short side, when you have a new high price breakout confirmed with a new high OBV indicator metric, then you've got a blue sky breakout signal, and you're going to get in a bull market like this 40 or 50 of them a day. But when the signal is coming up as it does here in NQ, which is NQ Mobile, it's I believe a Chinese internet company. I could be wrong on that. When it's coming up right against a resistance trend line, and here we have a well-developed, clearly defined one. We have a nice single touch point here. We have this cluster of uh, uh, consolidation price points underneath the resistance trend line, followed by a significant sell-off. And then we have a third attempt to run up into the trend line with a reversal candle right there on that particular day. That's the 21st of October. Those are all signs to me that this resistance trend line is one that needs to be respected. So the fact that this breakout signal is coming very close to the resistance trend line, and we have bearish divergence in the MACD. MACD is not confirming this breakout. We want to think about shorting that, and you can see this. I mean, it turned out to have some really bad news on the earnings front, but this went from 25 all the way down to 8. That's a rare short, but that's a beauty of a short, just to show you how powerful this indicator can be. And the stock I'm going to recommend you do a bit further due diligence on for tomorrow morning is one that gave today a new breakout signal, but I think it's best, in other words, to short it from tomorrow for at least a short period of time, and I'll show you where I think you should think about covering. It's this stock, Hawaiian Air. So this is the stock I'm going to suggest that you do a little bit of your own work on for tomorrow morning. It has a nicely defined 3-touch resistance trend line. And at the time that I recorded this chart, this was a fresh chart from today, but it was during the day's trading. HA, or Hawaiian Air, it's a small airline, runs out of Hawaii. They started, I don't know, 30, 40 years ago with just a couple of planes flying among the islands. Today they have international flights all over the Pacific Rim, and it is one of the great growth stories of 2012, 2013. It's a great growth stock, but growth always comes with a price, and one of their prices that they're paying now is quite high debt. Their margins are getting squeezed. They're down to under 2% margin rate, and so I just don't see this trend continuing that much further. Moreover, we have a new high breakout with a new high in OBV. That's the two minimum standards for the blue sky breakout, but it's right up against this resistance trend line, which is very well developed with two very clean pivot highs, one right there in March and one right there in late July. Here we are in a third touch, and the third touch is often the charm. You will often get your sharpest pullback from the third touch in an upsloping trend line like this, resistance trend line. And we also have the MACD, which is not confirming the breakout, but instead is giving us some bearish divergence. MACD is a lagging indicator, but what this is telling us is that the momentum has not yet caught up to the price. And when that happens, you often get a pullback in price. Where do I think this is a pullback? Well, I have this little dotted line in here, which coincides with the pivot high back in July, and also with some resistance highs in September, and also a little bit of a pullback right here, which closed right around that line for a couple of days. So I'm going to suggest that this blue sky breakout is probably going to pull back. It closed at around 852 or something today. It's probably going to pull back to about 780. And if you're short there, you might put on an order to not only cover your shares at 780, but go long the same amount at 780. That's how I'm playing it in any case. I'm already short this stock, just as a full disclaimer. I don't have any positions in any of the other stocks we mentioned today, but this is one that I do currently have a position in. And my stop is going to be above that resistance trend line. So if it gets up to about 870 or so, I'm probably out of the trade. But I'm looking for a pullback of about 70 cents, which is significant on an $8 stock. and I'll likely flip it at that point and see if we can't get a little bit of upside momentum, because it is a great stock. It's a great growth story, and it's one that you don't want to be short for too long. The other factor to HA is that it's a favorite of the shorts. It has a very large short float, which you probably know can get covered very quickly on a breakout. And some of this move that we see here in late October may well be some short covering, so kind of a short squeeze of those shorts that are worried about too much downside to their position. And so once the short squeeze runs out, you then often get a pullback of some sort. So we want to watch this, but I am throwing this out there as a possible recommendation, and it's a bit of a flip to how this system is normally traded. And again, normally you're going to want to look for a new price high of at least 40 days coupled with a new OBV high and a new MACD high. Now, if I can point out, we've traded HA a number of times over the year 2013, and it's always been a good trading vehicle for us. And one of the setups that I really liked a lot was this one right here. This was a nice little blue sky breakout. We had a little 5 or 6 day consolidation, and you can see that right in here, 5 or 6 narrow range days with what looks like some of the very clear signs of high frequency trading. See all those little tails and head, the little up tails and down tails in all these doji candles, where you have very little price movement from open to close, but a lot of intraday movement. That's a sure tell sign of the high frequency traders at work. And so once they did their damage, then we had a lot of the short sellers, or those sellers, the weak hands, flushed out of that position. We have a new OBV high confirming there, and we're at new highs with MACD. So all systems were go in this nice growth stock. And as you can see, it traded from about 650 on up to a peak of around 8 or so. We didn't get the full measure of that. We were stopped out somewhere on the back side here, but it was a nice trade nonetheless. So normally you want to use the system I just taught you, to go long stocks, and you certainly want to employ it in a market like this one, because that's what you're going to find for the most part. You're going to find breakout setups all over the place. How do you weed them out? How do you weed out the best from the rest? Well, apply those 3 further filters: a MACD confirmation, lots of room before you hit the resistance trend line, and then at least some basic fundamentals that support the breakout moves, either on the growth side, that's usually best on a breakout move, or on the valuation side, if not both. And then you're good to go. And it's really going to help you whittle down.
Oh. Oh. Hello? It looks like we've actually lost a presenter for a second, so hopefully he'll be right back in. Let me just while we get him back, maybe. Hey Jim, how you doing? Welcome to today's. Nice to see you. We're going to be down in Detroit to visit you over the weekend, I understand. We did lose Dr. Carr for a second. Looks like he's coming back in here. Dr. Carr? Okay, you're going to have to turn on your microphone, but we lost you for a second. Dr. Carr, you're going to need to turn back on your microphone. Say hi to Lisa for me, Jim.
Okay, sorry about that. I just was explaining this brief offer, a special offer to anyone who signs up for any of our new, our 3 stock pick letters. Just go to drstoxx.com, and once you sign on, you will have instant access to a 2-hour webinar that I put together called Trading Bootcamp. Everything you need to know to be able to read charts at a basic level, all sorts of ways you can save on your trading commissions, how you can split the bid and the ask, and all kinds of nifty little tricks that traders know how to use, and a number of other things as well in the Trading Bootcamp webinar. And that's free of charge to you. You'll have full access to it. You can watch it as many times as you want once you sign up for the letters, and then you'll log on to our site and you'll see it right there. Email me at drstoxx@drstoxx.com if you have any questions. Otherwise, God bless everybody. Thank you for coming. And Jeff, I'll hang around if there are any questions. I'm not sure if you want to talk first, but I'm happy to answer any questions that come up.
Yeah, we'll go ahead and let some questions come in. While we're waiting for some questions to come in, feel free to ask. Dr. Carr is going to wait for a while, or going to be here for a few minutes to talk about things. I just want to talk a little bit about how much work went into the add-on. Like Dr. Carr says, we really spent a couple of years on this thing, and it's one of the things that you kind of put a lot of time and energy into, and we're very, very happy with it. It's got really literally, it is probably one of the biggest add-ons I've actually ever released in terms of the amount of setups that are included to the long side and the setups that are included to the short side and stuff like that. And anytime we actually kind of put that much effort and work into something, we always kind of we hope we're working on the right things, if you know what I mean. And, it is a full-featured Metastock. It's got the commentaries in it. The commentaries, we did our best to actually include a good setup explanation, your stops, your targets, where you should put your ATRs in, all of that kind of stuff. And we tried to keep it in line with the book. And we were really, really happy when, if you get Stocks and Commodities, just November, they actually reviewed the product. Dennis Peterson does a lot of products for us, and he's a tough pickle to please. But all in all, he said this is a very worthwhile add-on. It's fairly priced. It's only $399, and it has real profit potential. So the full review is there in the article. I'd recommend you take a look at it. The one thing that we're going to do for you as a result of coming to the webinar today is if you want to take a look at this, I'm going to give you a Halloween special. In other words, it's normally $399. If you get it today or tomorrow, and you do have to do it today or tomorrow, it'll be $299. We do have a couple of people that are kind of sitting by. They can answer any questions that you've got. The phone number that you can call in is 1-800-882-3040. And with that being said, I'm going to let Dr. Carr come back and answer any questions that might have come in.
Thanks, Jeff. I did read a couple from the comments there. Feel free to type in others if you have them. Alex was asking whether I trade only stocks. Alex, that's a good question. Mostly stocks, yes. I trade options quite a bit. I use options in a variety of ways, sometimes to hedge the risk that I'm taking, sometimes just as an outright call or put position if I really feel very confident about the trade. I do a little bit with Forex, which is a new area for me. And boy, that's been a lot of fun. That's a nice, fun moving market. But that's new. What I have more experience in is trading the E-minis. So I trade the S&P, the SPOOs, and the NQs, mostly those two. I trade gold a lot, but not so much on the future side, more on the ETF side, and as well as the mining stocks and the ETF mining stocks. But that's about it. Alex, let's see. STC asked about on-balance volume and a moving average. On-balance volume doesn't have any periodicity, so it just comes as a standard cumulative number that is added to or subtracted from each trading day. But I do apply to it the 21-period exponential moving average as a smoothing indicator, and I like to see that also running up in an uptrend for breakouts to the upside in addition to a new OBV high, and to the downside in a breakdown on a short position. And I also like, or prefer rather, to trade on the long side when OBV is above the 21-period moving average. If I get a pullback in an uptrend and OBV crosses below the 21-period moving average, I'm going to wait until it crosses back up above. And very often, you'll get in at a better price. You'll get in at a lower price if you do that. Once OBV really starts falling sharply, what that indicates usually is you've got a lot of money coming out of a position. And even if it looks like a decent little pullback, it's like it's right at the 20-period moving average or something like that. It may well have further to go, and you can get in at a better price. So I use OBV a lot to time my entries, but also to confirm breakouts. And then I also saw a question from Pre. What happens if Hawaiian Air opens above the resistance trend line tomorrow, which it may do, because it's really not that far. It didn't close that far from it tonight. then I would wait. I would not short it above the resistance line. If it closes above the resistance line, and sorry, if it opens above the resistance line and then trades down on the day, in other words, if it puts in a red candle, and especially if the volume is pretty high, I would short that in a heartbeat, because that's a sign of distribution, and you want to get on the short side of that. But that's the only case. If it opens above the resistance line, wait until you see a good solid red candle with good volume before you short. Let's see, STC asks also about the moving average. So again, OBV, I use an exponential 21 period moving average as an overlay. Those are the only questions I see. If anyone else has any other questions, I'm happy to answer. Otherwise, I'll turn it back over to Jeff.
Okay. All right. Thanks, Dr. Carr. Great to have you. We appreciate you coming in and sharing some time with us. Jim, just in case you didn't see the response, this add-on will work with 11 or 12. It requires 11 or higher to operate. So with that being said, I'd like to thank all of you guys for coming today. Do give this a try. Of course, we offer it with our 30-day money-back guarantee. I'd recommend it, and obviously so would Dr. Stoxx. But also, it is very, very highly reviewed, and it's a product that we're personally very, very proud of. We put a lot of time on it. So anyway, if you have any questions, drop us a note, and we'll see you at the next webinar. Thanks for coming, everybody.
Thank you, too. Thank you, Jeff. Bye now.